Welcome back to 7-Minute Options. I'm going to be looking at a backtest on EEM, which is an emerging markets ETF, why the backtest looks good, and I'm going to try to open this position today. I feel pretty good about this one. So I was playing around with a backtester, and what I did is I did the typical setup I usually do on strangles is I go 30, 40, 50 days out. In this case, I went 45 days. This seems to work well. And I sold the 15 delta short call, the 15 delta short put. And in this setup, I did it once a month. So 45 days before the typical monthly expiration. So if the typical monthly expiration, it being on like the third Friday of each month, somewhere on the 18th, 19th of the month, back up 45 days. So I figure, okay, if we sell this, if we open this once a month on the third day of each month, and we're going to hold this for 30 days. So if we hold it for 30 days, then we'll have 15 days left before expiration when we close out the position. Or if we reach a 50% profit target at any time, then we close it out. So in this position, I will either reach 50% profit target or I will close it out when I reach 15 days to expiration. So this backtest did really well. Going back 5 years, or in this case, 64 trades, right? 64 months. The expected value is 1158. This is generally a very good, consistent, profitable trade. The other thing I like about this is 89% of the trades were closed profitably, which is really good. Looking at this in a different way, it's quite remarkable that between February of 2016 and December of 2018, it essentially had no losses. Like it was just small win after small win after small win. And there was one tiny loss you can see there for like $5.83. But I mean, this was just consistently, banking good money. There was a bit of a loss, with the little pullback we had at the end of 2018. And of course, the COVID crash was the big loss, but still only $294 during the COVID crash. And then another, what's that one? Another 210 3 months later. Again, so those are relatively small when you're looking at the average portfolio. So this isn't going to make your portfolio blow up by any standards. I mean, if it survived the COVID crash with just $500 in losses spread across 3 months, you're going to be okay. And other than that, if I look at the equity curve, it was very consistent. Like I said, it didn't have any losses for 2 years, which is pretty amazing. And then, of course, during COVID, it pulled back. So COVID erased roughly, if I look back here, 2.5 years, right? From October 2017 to March 2020, let's say 2.5 years of losses were wiped away during COVID, but then it came right back, right? In the year since. It took 1 year to recover, which is really amazing. So, yeah, let's check out this position and let's see what this looks like in real life. So if I go back to Tasty, where are we? There we go. So let's take a look at how this looks in real life. So back on Tasty, we have the 15 delta put, 15 delta call. This is the closest that we're going to get to it, which is 16 delta in this case, but it's close enough. Right now, we could get 62 in credit for it. Now, the IVR is 11. The IVR is not particularly high, but again, the backtest worked in all IVRs, and if you think about it, we got 62 credit. We're going to close this at 50%, so I'm not looking to collect more than $31 in this case. And in the backtest, you can see here, the median payoff was 22. So you go through these low IV areas or sections where, yeah, the IV is low and you're only making 11, 12, bucks, whatever, 20 bucks, 30 bucks on each one. Yeah, when the IV is high, you make more. But most of the time, you're making very little. So most of the time, you're making between 0 and 50. The majority of the gains, the majority of the outcomes were between 0 and 50. And that's exactly what this would be. So if this works out in our favor, we're going to basically close this out when it goes down to $31. And we buy it back for 31. So I'm not ecstatic about it, but I feel pretty good about it, right? Now, it's going to cost me $824 in buying power. I'm going to get 2 theta, it's 1.96. Let's say 2 theta for that, which is about $400 per theta, which is very good. That's right around my personal target of between $400 and $500 per theta. And it's a delta neutral position. It's an ETF. There are no earnings to worry about. It's an ETF. It moves slowly up and slowly down. And if I look at the chart, this is what it looks like. That's the 59. That's the 52. You can see the last time it breached, for example, any one of the short strikes. Let's say the short put that was breached back in May 13, almost a month ago, and it bounced pretty hard off that line. Again, it bounced off that line back in March as well. On the upside, I mean, I can't remember the last time it reached 59. I mean, it kind of challenged it back in February, but didn't even touch it. So I feel good about this. You know, this isn't going to make me rich, but it is going to help me get to that annual 20% return. That is my personal target. And it is going to get me more theta. It's a delta neutral position. So I'm going to try to open this up. If you look at the options chain, let me just quickly highlight that one again. So that was the 52. Yeah, there's 10,000 people trading this one. A lot of open interest there. The market is only 3 cents wide. And on this one, which was the 16 delta, yeah, that was the one, 38,000 in open interest there. So again, that's a 2 cent wide market. So I have no worries about opening or closing these. And yeah, let's see if this opens. Right now it's working on 62. I have roughly 45 minutes before the market closes, so I might adjust this downward to 61 or 60 in the next few minutes if it doesn't close. But either way, yeah, that explains the thinking behind this position, and the back tests make me feel pretty confident that this will work out. If it doesn't work out, then I'm going to be rolling it month to month. Again, it's an ETF, so there's no earnings trades to worry about or any singular events. So yeah, let's see how this works out. Thanks.